The Shirvan Speaks podcast is brought to you by FitzGerald Financial Group, a division of Town Bank Mortgage. NMLS number 512138. Shirvan Joseph, our host, is NMLS registered. NMLS number 188513. The contents of this podcast are for informational and educational purposes only. We are not financial advisors. Shirvan Joseph and FitzGerald Financial Group are equal housing lenders. This is not a commitment to lend. Enjoy.
Good morning and welcome to another episode of Shirvan Speaks. We're glad to have you. It's just it's spring. We have our fearless leader. I'm not going to give him the intro. He gets a little uncomfortable because we sing his praises, but boy, he's something. And we have our guest, Sean Higgins, Executive Vice President of United One, which is our credit entity. And I'm going to let him explain what that means. So without further ado, we need to get this started.
It means he's my friend.
Well, he means it's his friend and my friend, because in the mortgage business, there's three things I tell people you need all the time. It's credit, assets, and income. And oh boy, everything starts and ends with credit. So everything you want to know this morning with regards to credit, and even things you didn't know that you needed to know, you'll find out this morning. Sean Higgins,
thank you.
Pleasure to have you.
This is our second time around with this one.
Yes, with the podcast.
Yes,
we do a lot of
we've done probably about 25 or 30
over the years presentations,
Yep.
and it's not going to stop.
No, not at all. So I appreciate that. So
tell us, introduce us, give us a little background on yourself.
Sure. So Sean Higgins, United One. We're based in Wilkes-Barre, Pennsylvania. This is my 34th year in the business. Been doing it a long time, and we love our customers. So we're very, very pleased to participate in these types of presentations and hopefully educate some people out there and reach a couple of people and maybe turn them into homeowners. That's the goal, right?
Well, that's always
what we
the
always
goal.
talk about. Right?
That's always the goal.
So I've got a whole bunch of things I could talk about today, but I don't want to get too far ahead of myself.
Right. I want you to tell the audience so they can embrace not only who you are, they know your title, but what you do for us at FitzGerald Financial Town Bank.
So first of all, I'm very fortunate to have your business, much like all my clients. And what we do is we look for opportunities with every credit application that comes in. Usually we have a strong loan officer like yourself who'll come up to us and say, hey, I need to improve this score. You're a little bit different than a lot of the people because you know your way around those simulators a little bit.
Yes.
And you're always looking out for the best. So what we do is we try to sell beyond the transaction. We want to make sure that these applicants are given the best opportunity to get the best credit score, which hopefully will turn them into a buyer, along with a couple of other things that you need to do between the assets and the income and all that stuff. And most importantly of all, they have a house. So that's what it's all about. That's where I fit in. I'm very pleased to have a seat at the table as far as that goes. And it's been a long standing relationship with both you and Dan. So I appreciate all the business and all the opportunities.
Well, we appreciate you. And so does all of our customers. Dan, can you tell me or tell us what does credit mean to FitzGerald Financial Group, or from the process, from a processing standpoint to getting loans approved to the end?
Well, you always want to enhance anybody's situation, make sure they're in the best program for them. They're in something that's the best for their family, and doing a quick credit profile review is really something everybody should do. I really do believe we have the upper hand because we have somebody like Sean who, Sean will tell you, I call him morning, noon, night, weekends, it doesn't matter. So he picks up my calls all the time. The service level that we have, I mean, I really think it's just one of our big pluses that we have is that we have Sean at such a high level and everything that they do. But, it's important that everybody tweaks their credit as best they can, because just a little tweak, people think it's 700 or whatever, I'm good to go. But if you get to 720, pricing's better or whatever. So there's a lot of things that we can offer up front to make the whole process move smoother.
And I agree. One thing that I want to touch on that you touched on, Sean, was simulations.
Yes, sir.
When we pull a credit report, and the credit report might come in lower than expected, or lower from a qualifying standpoint, or even, as Dan just mentioned, a 700, and we need to raise the bar. Explain simulations and what they do for us.
Sure. So I will tell you, in all the years I've been doing this, I've never seen a perfect credit report. So that means that there's always an opportunity to improve a credit score.
We have a simulator tool that will take a look at the credit report. It'll split it up into the different types of accounts out there, and it'll suggest actions based on, the input from someone like yourself, Shirvan, or someone on our team. Suggest actions to reduce, maybe reduce some debts, maybe get some information that doesn't belong on the credit report off the credit report, all with an eye towards improving that credit score. So it could be as important as someone not being able to qualify, that can't qualify right now, getting someone into a better rate, getting mortgage insurance reduced, you name it. There's a whole host of opportunities that exist when we actually have an opportunity to look at a credit report. I could tell you with certainty, probably 99.9% certainty, there's always room for improvement.
Agreed. And just a side note, anytime I take an application, and I know most of our loan officers are in the same vein, and if the scores are not there, I will automatically get simulations for the borrower to explain to them how to improve their score and what they have to do. It's self-explanatory, and it tells you, hey, do this, this, and this, and you invest this, and your score will be this. So with all of that said, what are the other opportunities we have to improve the score, in your opinion, from an underwriting standpoint? What makes success?
Well, there's several things. A lot of times when people have an opportunity to say, hey, if there's something on your credit report that you didn't agree with, that you've been disputing, that you've been calling 1-800-IGNORE for the last 2 years, now let's go back, let's talk to Sean, let's see what we can do, and let's dispute that account if it makes sense. It's probably the most overlooked thing, is that, the nagging issue that you kind of been tolerating, I'm going to call it.
Right.
Let's not tolerate it anymore. Let's make sure we take care of it. I'd also like to kind of jump in that same thing. There's a lot of people who say, hey, I'm thin on credit. I don't have credit. My child is, just out of school. They haven't established credit. Sean's excellent at working with me on how do we get those people credit, and we get them credit quickly.
Yes.
Some people think, oh, it's going to be a 2-year process or a 1-year process. No, it's a pretty quick process, and it's going to open up a lot more loan programs for them. The other thing you need to take a look at is, how many people do you need on the transaction, and how many people do you have on the transaction? Sometimes that person with a lower credit score is not needed on the transaction. And unfortunately, credit is based on the person with the lowest credit score in the transaction. So by taking a look at that and kind of like making sure you're putting your best foot forward, it can make a significant difference.
Wow, that's enlightening, and I'm hoping you're paying attention. Sean, tell me, credit fitness, you use this term a lot. What does it mean?
It's knowing what's on your credit report. It's plain and simple. I'll tell you, when I got into this business, no one really understood their credit reports. Now everyone knows about their credit reports. So I always tell people right out of the gate, the best place to start to find out the truth is with a strong loan officer like Shirvan. Shirvan will always pull a credit report. Some people will come in with some preconceived notions. I've been involved in those conversations with you where they may think that this is happening or that's happening. But really, you should start your process by knowing what's on your credit report. You'll get the truth from the loan officer. There's annualcreditreport.com. Everybody in America is entitled to a copy of their credit report for free. Know it, understand it, look at it, see who's been pulling your credit, see what's impacting your credit, and then you got to talk to the professional, because when the average consumer is left to their own devices, they may not understand it as well as someone like Shirvan will. So that's where it always starts, and that's our point of entry as well.
Dan, we talk about building credit for those that are either struggling with credit. What do you suggest from a building credit standpoint?
Well, building credit really is about establishing accounts, and sometimes there's certain accounts that you can get on your credit report faster than others. There's certain times you need to do secure credit accounts if you're really struggling. Maybe you need to open up a $500 savings account and pledge it against that. That's also, something that people will use frequently. A lot of times I start the conversation saying, well, who do you go to right now if you want to buy something online? Because everyone wants to buy something online.
Sure.
They say, well, my mom and dad, let me use their Visa card or whatever. I'm 21 years old. I'm like, okay, well, see if they'll put you on there as an authorized user. I mean, basically, you're being an authorized user, you're logging in as them. So we do that. That has an impact. So it's little things that people don't necessarily know or are aware of or take advantage of.
Right.
That make a difference. So bam, we can get that. And then, in 30 to 60 days, you're in a different situation.
Different situation. Sean?
Yes, sir.
Credit rescore. What does that mean?
So credit rescore. So when we pull a credit report, you're going to get a credit score right then and there. It's like a stopwatch in a race. Boom. Pull a credit report. We look at it. We see what the scores are. Scores. The high score is 850, and the low score is in the 300. So there's a range. So what we do is we have a couple of different scores are starting to make their way into the market right now. In any event, the one that we have to stick within our conversation is the FICO Classic. When we find an issue with the credit report, that's obviously part of a trade line that's making up that score, we can run it through our simulator, look for an opportunity to improve the score, gain the evidence documents, send it off to the credit bureaus, and we can usually rescore a credit report in 24 to 72 hours. 24 when it has to be, 48 to 72 is the normal.
And I want to jump in right there. That's what makes Sean the magician. I mean, if you go online and say, yeah, we'll update your credit in 30 days, we'll update your credit in 45 days, the next cycle and stuff like that. But because of that relationship, I mean, that's real time.
Yep.
That's really, when he says 24, 48 hours, that's real. That's not,
that is real.
We do it all the time.
Right.
And that's where it's such a key. I always jokingly say one of perhaps the biggest mistakes I ever made in the business was I introduced Sean to some of my competitors.
That's right.
But,
that's how valuable he is. Seriously. No.
We have a great relationship, and
he's our umbilical cord.
And not to overstep. I mean, I kind of am a guru on doing those credits and getting those things reset and getting people in the right thing. And I love doing it. I mean, I love taking a 620 and getting it to a 700 in a reasonable period of time and seeing people's rates improve and more options open up.
Right.
I always say getting a mortgage is like a menu. The better it is, the bigger the menu is going to be. So if we get you more options, we can open up the menu because nobody wants to go in and say this is all you can eat.
Isn't that the truth? Wow. Well put. Well said. Tell us some of the myths about credit.
Sure. That's a great question. Two come to mind right out of the gate. I know a lot of times when a loan officer is working with a consumer, they'll say, "Hey, if you pull my credit report, it's gonna attack my credit score." That's the biggest myth I hear on a daily basis, and the answer to that is it won't. If you have a credit report, if your credit report is accessed in a loan process, a hard inquiry, you can pretty much expect that that's going to have an impact on your credit score by 5 points, and it's not going to happen from within 30 days. So that's the big myth. Pulling my credit report is going to impact my score. That's not true. It's a necessary part of the process, but it's only 5 points. The second one that I run into all the time is that scores can't be improved. And we just spent the last couple minutes talking about that. I mean, I don't know how else to say it other than to say it's an injustice if your lender is not looking at your credit report to see if there's an opportunity to do a credit score. That's how you guys win business all the time.
Oh, absolutely. Absolutely, 100%.
So those are the two things that I run into the most, which is, and then obviously the third one that I see a lot of is the consumer tends to show up with an indication of what they think their credit score is. There's a lot of different score models out there.
I was about to ask you.
I think about 3/4 of the United States has a Credit Karma account, and that uses a different score model than you use in mortgage.
Right.
It's about 30 points difference. So that's a conversation. That's an opportunity to educate people at the time of application.
Agree.
And talk to them about that.
Right.
So those are the three myths that I see quite often that with a strong loan partner that's really taking the time to understand their craft can get you through those processes and hopefully win business that way.
No, absolutely. Dan, what's your thoughts on the credit myths? Anything to add in that regard that you see from the front lines?
Well, everybody needs a road path.
Yes.
And if your road path is, hey, I can't do something today because of something that happened in the past. Hey, that's fine. We'll still love you. We'll still give you a hug. And we'll still help you.
Sure.
And remember, we're not credit repair. Our services are free. Why you don't take advantage of it? It's foolish. Don't get sucked in by somebody who says, give me X number of dollars and I'll help you on your credit. Everything that we do for you on that credit side, we don't charge you for until the time that we actually do a credit report, and then you pay for that when you close on a home mortgage.
So we have a running when we do seminars together. We will always cover each other because Sean will always say, And you know how Shirvan feels about credit repair. My point on credit repair, to echo what Dan is saying, you spend thousands of dollars on credit repair. And with us, we're telling you exactly what the credit simulation is telling you to do. And you're just spending money taking care of the credit at hand. In other words, lowering or paying off.
And we're not just handing it to you saying,
yeah,
we walk you through.
Absolutely.
When needed, we get Sean on the phone, say, help me execute this, help me execute that. We talk to your creditor, help you execute that. Because when you get the spit out, people need guidance. Okay. So we're always here to guide.
Sean, what does the trigger law mean?
So the trigger law means a lot. In the last few months, the trigger law took place. And really what was happening before the law, before President Trump signed this into law, was anybody that had their credit report, a hard inquiry pulled for their credit report, of their credit report for a mortgage application, would start to get incessant amount of calls from people that were trying to steal your lead from your perspective. So it was very, very difficult time in the mortgage industry, because I know a lot of good people would access credit reports as a loan officer for their, part of their process. And their borrowers would start getting, or their applicants would start getting millions of telephone calls. I had a lender that called me one time, and his sister got 59 phone calls in the course of a day. And I said, well, we don't agree with that. It's not something that our company subscribes to, but hopefully that'll never come back, because the good guys won that one.
Right.
And it keeps a lot of people out of consumers' hairs when they're applying for a mortgage.
So put that in plain talk. That's gone. That's over.
Yes, sir.
Yes.
So don't have the fear of having your credit report pulled.
That's right.
In a hard pull.
That's a good myth.
That's a myth. But let's be clear. That day has changed. It was March 5th.
Yes, sir.
Day goes down to infamy in the mortgage business. That's why I'm not going to forget it.
With regards, gentlemen, with regards to medical debts on your credit report, collections, and so forth, where does that stand on the credit report? Is that,
if it's paid, it has to come off. It used to be, consumers used to be held hostage,
right,
with a paid collection account. So it's, it's something that unfortunately makes its way on the credit reports. I like to tell people my wife is in the medical billing business, and the only reason people end up in collections in that role really is because they've ignored, and maybe they were in a spot where the insurance company didn't take care of what they had to deal with. But when we come back to credit fitness, if you're keeping an eye on your credit report, you'll see that. You'll act upon it properly. Get it off your credit report, because that score can be impacted with a medical collection by as much as 70 points. But now that it gets paid, the new law says it's got to come off the credit report. So it's good. It's a good thing. I can take a full circle through the whole credit fitness process, but a medical collection was nothing more than a hammer to make someone pay a bill. And prior to the change being made, it had a negative impact on credit scores, and people didn't deserve that in life. They really didn't.
What are the chances, and we're going to close out soon, but I just have to ask this. What are the chances when someone pulls up their credit report, there are errors on the credit report?
I would say it's probably greater than 75% of the time there's going to be a mistake. There's going to be, I've seen names being entered incorrectly. I've seen common name issues where junior seniors credit reports have been impacted by it. You name it. I've seen student loan processing companies not reporting student loans properly. For instance, if someone is in a forbearance or has a deferment or something like that, and it's still being reported as being late, there's just a whole host of things. So let's come back full circle. Let's say the consumer is well aware of what credit fitness means. They're looking at their credit report on annualcreditreport.com. They've got good control over those processes. They work with a sharp loan officer like Shirvan or anyone on his team here. They're going to look at that as well, and it's not going to be missed. But I could tell you the best place to start is with the credit fitness at the consumer level.
Folks, one thing that you've noticed, the leader, founder, hands-on. How many people do you know that lead an organization like FitzGerald Financial, Town Bank? Hands-on, have someone, a partner that takes care of us from a credit standpoint, knows that if every deal matters in making sure we get as much points as possible, whether it's 700 score, whether it's a 620 score, whether it's a 580 score. And think about it. We have seen in one shot, because customers follow what they're told, 100-point swing. 100-point swing. People think that, oh, there's no way. But if you follow whatever they say to do, you could have a 100-point swing on your credit report.
Absolutely. And
So-
that's a big deal.
That is a big deal. Well, it's a difference in rate too. So Dan, in closing, what do you want to put a bow on the credit?
I'm gonna put a bow on and say this. We do all that. The difference is we give you the extra time. We give you the extra relationship. We bring all that to the table. We walk you through it. We do all those things. We make sure that we're extremely high touch, that we meet with you in person, that we are completely involved on a very personal level, all the way up to me. And we do that for one reason. I love my job and I love the people I do it with.
1, 2, 3. I love my job